Hey everybody, welcome back to CoinDesk Live. Special thanks to everybody who joined us at Invest Ethereum Economy yesterday. My name is Aaron Stanley. I'm Managing Director for Events Content here at CoinDesk. Here we're trying something new. It's a special edition of CoinDesk Live where we're going to recap our event from yesterday, kind of talk about some of the key points, big takeaways, or the high points. So I'm joined by fellow CoinDeskers here to kind of break some of that down. So we've got our policy and regulatory sleuth reporter, Nick Day. We've got tech reporter, Will Foxley, Marcus reporter, Dan Kari, and research analyst, Christine Kim. Thanks everybody for joining us.
Great to be here.
Morning.
Awesome.
Thank you.
So I guess first off, I'll just say it seems like we're getting really lucky with the timing on these events. We had the Bitcoin happening right at consensus distributed back in May, and then obviously now with the deposit contract, at least seems like it's right around the corner. So the timing of this event really turned out well, and we had a lot of really good demand from attendees who are interested in who want to kind of get on this development. So I think, like, I guess to start off, it seems fair to say that the seminal moment from yesterday was CFTC Chairman Heath Tarbert praising Ethereum while sort of simultaneously, inadvertently dunking on Bitcoin, which sort of took over Twitter. So I'm going to play this clip here. It's entertaining, and I think it's a positive development, but it's also quite entertaining. So screen and play this.
Aaron, you still with us?
You guys see that okay? Or is that dodgy?
Something is going.
I can't see anything. I can see your
Yeah, me
guys'
neither.
faces, but not the screen.
Well, Daniel, how about you do an impersonation since you look like the CFTC chairman the most out of all of us? Just kidding.
I like Ethereum. It's incredible. It's incredible.
Okay, well, my hot take really quick on this was I didn't understand why all these Ethereum people who are supposedly like anti-censorship are praising a regulator whose job is to censor applications. But I understand like the critique to that is, these applications need to kind of co-work with the world we live in. But at the same time, like if I saw like a Luke Dash Jr. or Peter Wool going out and like praising the SEC for its position on Bitcoin or whatever, I'd be like, oh, that's kind of odd. But we just saw everyone just going kind of fanatic over what he said yesterday. So that was interesting to me.
I feel like it was less the praising of Ethereum and more the fact that he kind of just accidentally dunked on the Bitcoiners, right? When he compares, Bitcoin to email and Ethereum is this much grander, sophisticated, internet in its totality. And I don't think he was meaning to take a shot at Bitcoin. It was just, he was trying to flatter Ethereum in a sense, but it came off as, because like right when he said that, I was like, oh man, like these Bitcoiners aren't going to like that. So anyway, but Heath Tarbert, Commissioner Tarbert actually said some, pretty interesting things otherwise that, weren't related to just praising Ethereum, I guess. Nick, you wrote up an analysis of Tarbert's talk and also had a couple of regulatory sessions that you hosted on the Unlocked track yesterday, looking at some of the legal issues. Maybe what were your big takeaways on this front?
Yeah, so I don't know that we necessarily learned anything new yesterday. Heath Tarbert's praised, crypto in the past. He said, I think in July, he told me that he definitely envisions a future where, a large part of the financial system might be built on top of some kind of a crypto network. So that's not necessarily a new viewpoint he's holding. He's expressed these thoughts and views before. He's clearly done, some research, a lot of research into the space, and he's, as a regulator who directly impacts the crypto world in the U.S., he's definitely amongst the group that have really learned about it. So I want to talk about like maybe 3 other things. So first off, CoinDesk Chief Content Officer Michael Casey hosted a session yesterday with Heath Harbert, and he asked about the ongoing litigation against BitMEX. For those of you who aren't sure, BitMEX was sued by the CFTC and now faces charges also from the Attorney General's office for the Southern District of New York, basically alleging that it allowed U.S. residents to transact on its platform, buy derivatives contracts and trade without conducting know your customer processes, therefore violating the Bank Secrecy Act, as well as violating certain aspects of the Commodity Exchange Act. The CFTC's laid out the initial case, has to prove his case in a court of law, of course, and that's going to be, one of the next steps. I imagine we're in for a long legal battle just with this case. But the question, the real question is this just a first step? And if so, who's next? I'm willing to bet that, we're going to see another case like this in the future. Michael Casey did ask, and Heath Harbert only said maybe in response. But, I think I'm willing to bet, the $10 of Bitcoin I still have, that there's probably going to be, future cases, and BitMEX might either be just a prelude or it might be the kind of example that, will be used to lead to these other cases.
Well, it seemed to me that what he was saying about, kind of protecting the integrity of the U.S. market and really his emphasis on, protecting like the law-abiding exchanges operating in the U.S. and then also just even like the body language that he used when he says maybe we might have some more in the work. It seemed like pretty clear that okay, there's some more things in the pipeline here that, of course, he's not going to tell us who it is, but it seems pretty clear that like these guys are they're not sitting around anymore. We're just waiting around.
Yeah, and so one detail that really stood out to me in the CFTC's complaint against BitMEX is they quoted a relevant period between November 2014 and now. So the relevant period here is like, this is when the actions they allege took, they're going after for, that's when those actions took place. So we're talking about an exchange that operated within the U.S. between 2014 and the present day without conducting the Know Your Customer or, other Commodity Exchange Act processes that they should have. I can name, or I can think of at least a couple other exchanges that pulled out of the U.S. in recent years that still, operated within the U.S. and might be, subject to the same kind of allegations that CFTC brought against BitMEX. So, if I'm, working at one of these exchanges, or I'm a lawyer at one of these exchanges, I'd maybe want to be, just paying attention to this case for sure. If I'm a user on one of these exchanges as well, definitely see how this plays out.
Yeah. So Tarbert also mentioned he was talking a bit about environmental benefits to a proof of. I guess this isn't necessarily like environmental benefits. So it says like, why is it something that he would care about as the head of the CFTC? How would the environmental aspects fall under his, like, why is it something he would be concerned about?
Yeah, that was very interesting. So a little bit of context. Earlier this year, I want to say early September, it might have been late August, the CFTC published a climate risk assessment, basically talking about how, climate change might impact financial markets, and then had some details on how it saw financial markets maybe, addressing or reacting to climate change. So that's really interesting. I mean, not to get too into the weeds here, but the U.S. government taking a position on climate change is odd to begin with. I'm not saying the CFTC is speaking for the entire U.S. government, but it is a federal financial regulator, so it does have, a pretty loud voice here. The fact that climate change in this context is, being addressed as being, described as something important, that is really interesting. The fact that the CFTC chairman brought it up, I don't think this was part of a question that was asked. I think he just brought it up on his own. That, climate change is a concern and that proof of stake might be more environmentally friendly than proof of work. I mean, obviously that will most likely be the case, as I understand proof of stake, but, just the fact that this is something that came up, that, this is something to be watched. I don't understand all the intricacies here, but I will say something to pay attention to. And, the question is, climate change is probably going to impact financial markets for sure, and maybe therefore the crypto markets are in some level to either take advantage of that or at risk from that. It'll be interesting to see how that plays out, or how crypto markets can respond to this, or how they can participate.
Well, it sounds like he's definitely been listening to these, kind of proof of stake advocates, right? Because the environmental benefits or the environmental impact is definitely a key talking point of kind of the proof of stake lobby, I guess, to the extent that one exists. But I mean, there are people in Washington who are kind of going around trying to educate lawmakers on this stuff. I think that's kind of like their main talking point is like, or one of their main talking points is like, hey, like we're like proof of work, but just better, and that we don't use as much energy, and you should treat us fairly or whatever. So it seems like he's been at least listening to these people and taking. I mean, if he brought that point up on his own, then he's clearly getting that from somebody, right? Somebody persuaded him that was a good idea, because Michael Casey about it, so he got it from somewhere. What about? I mean, what about on the question of whether ETH2 would can be considered a security or not? He kind of gave some clarity but kind of punted on that. I mean, what was your read of the tea leaves on that one?
Yeah, so the question of whether or not something is a security, that's always going to come down to the Securities and Exchange Commission, the CFTC's securities focused counterpart. It's not surprising to me that he would defer to the SEC on that question. It's basically the way things work in the US is, if it's paraphrasing, if it's not a security, it's a commodity, meaning the CFTC deals with what the SEC doesn't. I think, the question for the SEC is, how is it going to apply to Howey test? What are the other factors that might be in play? Howey's not the only way to determine if something is a security. You have the blanking on the name, but there's an act from like the late 1900s that also potentially addresses securities. So there's a number of factors. The analysis, my guess, is probably won't be written until after ETH2 actually goes live and we can see how that is operating in practice. The SEC, I'm sure if you ask someone there, they'd say it's like a facts and circumstances thing. So, how many validators are there? How does the network actually operating? Who's using it? Those are all going to be questions that they're going to be looking at. And then the second order effect is, how are futures issuers going to be looking at this? So ErisX launched Ether futures, so I'm sure they're paying very close attention to this question. We reported recently that CME is asking its clients about, interest in Ether futures. So I'm sure this is a question that they're going to be very interested in. So it's, it's definitely something to be looking out for. My guess is we're just not going to know for sure until, well after ETH2 launches.
Cool. Well, cool. Thanks, Nick, for your insights on that. Turning over here to our resident Ethereum experts, Will Foxley, Christine Kim, what was your curious as to what your sort of high-level takeaways from this event were? It was moderated a session toward the future of the ETH killer narrative, which was probably one of my favorite sessions of the event. My impression walking away from that was like, I kind of thought it was going to be like a slugfest, but I was actually pretty surprised, as it seems, there's a growing level of respect now between, the ETH maxi crowd, and then the people who are we're the Ethereum enhancers, which was kind of the new narrative that was coming out of that session. They're not necessarily, they've kind of given up on the notion that they're just going to take out Ethereum, but it's more of like, hey, we're all going to be kind of working in the same universe here, and we're helping build one another up, essentially. So what was your kind of takeaway? I mean, are you still, what's your analysis of the ETH killer narrative at this point?
Yeah, I thought it was a great panel. I think that you kind of saw within it the transformation over the last year or two of that whole narrative, quote unquote, of ETH killers versus ETH competitors. And it's much more becoming ETH competitors. Ethereum just kind of sucked all the bandwidth out of like the decentralized application space, whether it's just because the community is so large, or they just have more money, or they just have all like the bright guys with the good tech. It could be just like a combination of factors, but for sure, I think they just have like that network effect that we always talk about in crypto and in tech, where everyone just has to look to Ethereum first before they can build their own tech. One thing that we didn't get to that was a little interesting and I would have liked to get up or bring around is that there are some ETH killers out there, in my opinion, still. Polkadot Network it launched earlier this summer, and they're launching some other parachains and incorporating more blockchains. And that very much so is a competing vision to ETH2. And so we didn't really dig into that because we didn't have the lineup for that. This time around, we were talking more with some other Ethereum enhancers. But I think that narrative, it could come back around. But for right now, it's more about just compatibility between different chains.
Christine, Christine, what was your? So you had a panel with on kind of the impact of high fees on Ethereum, and you also did a panel on staking as a service with some of the staking providers. What were some of your high level takeaways or things you found most interesting?
I thought that with the high fees panel, it was really interesting how Ruin Christensen of MakerDAO stressed the main negative impact with high fees. It's not just that, it takes longer for some of your transactions to get processed. It's that it's actually cutting out some users from being able to use Ethereum and interact with decentralized applications. So it's really like only the wealthy people, only the people with a few $1,000s, a few $100s to spend around that can really interact with decentralized finance. And the way Ruin was talking was that the reason why so many of these decentralized finance applications are built, it's to service the people who are financially marginalized, the people who don't have access to normal banking privileges. So these high fees are really a negative to the people that these decentralized application developers are trying to target. So I thought that was a very interesting point, and one that perhaps in the crypto space, sometimes we lose sight of who it is that we're building the technology for. And it's funny because we also talked a little bit about competitors to Ethereum, and similarly to what Will was saying, I think the conversation there, again, pivoted to interoperability and pivoted to, we can't take away the user base of Ethereum, so we'll just try and create a bridge to Ethereum that makes it easier for users to move back and forth. I think there's this established understanding that the user base for decentralized applications is on Ethereum. And for anybody who wants to build a separate blockchain from Ethereum that can run decentralized applications, your best bet isn't to just, try and market a better platform. It's to show that the users and the decentralized application developers that are already building on Ethereum can easily interoperate with your system. So it's a very nuanced conversation, but I think it's a very important piece of how the conversation has changed over the past couple of years. So yeah, that was my main takeaway with that panel on.
And then the ETH staking session seems to get quite a bit of interest as well from attendees. I mean, I think it almost just seems that like with the whole what's been going on this summer with the DeFi, the DeFi summer and the agricultural revolution, like people have kind of like forgotten that like ETH stake is actually like going to be a thing here soon. And part of it's like, well, why am I worried about getting 15% return ETH staking when I can get 5,000% APY yield farming on whatever coin? So I think like, I mean, even though, talking about ETH staking, it's kind of like, it's almost like talking about like custody, right? It's kind of just one of these sort of like infrastructure nuts and bolts sort of thing. But I think just laying, the panel you did with Blocks and Anchorage and Alchemy was really great just in terms of laying out that spectrum of there's different types of staking providers. If you don't want to do this on your own, if you want to do it on your own, go ahead. But if you're not comfortable with that, or you're not, you don't have time, or you're not technically competent enough to do it on your own, there are a number of other people who will do it for you based on, and they have different solutions based on whatever your risk tolerance is. So, what was kind of your key takeaway from that session?
Yeah, I thought it was really interesting because I had always assumed that if you don't want to run your own hardware to stake on Ethereum 2.0, you have to trust a centralized third party to run your validator nodes for you. But as oh my goodness, I should remember his name. But the person who was from Block Staking explained that there's a way to use. Yes, there's a way to use staking as a service and trust in the validator operations that they're running in a decentralized manner. So I think that was a really key selling point that he highlighted, that you don't have to trust somebody with all your keys, with all your ETH necessarily, and you can trust that the operations are running in a decentralized way. You can check it on the blockchain, so to speak. I didn't go into too much of the details of what that looks like in practice, but I think just the idea that somebody is building a centralized or a decentralized staking as a service platform was quite unique. And then I thought Diogo from Anchorage, right? Diogo from Anchorage made a really good point that you have to, that the services for retail investors who want to stake on Ethereum 2.0 are very different from the interest and the infrastructure needed by an institutional investor to stake on Ethereum 2.0. Like an institutional investor, he was explaining, can't necessarily take custody of the ETH. They need to have a trusted third party to take custody of the ETH. So that's something that Anchorage as a company is able to give just the full service to for an institutional investor. So those are key considerations that I think, and I hope when listeners were viewing that panel could realize and maybe help them decide, if I am going to go down the staking as a service route, am I an investor? Am I a retail? It'll help make your decision for you, because Anchorage only services institutional investors, and there's an array of services that they provide because you're an institution. Whereas for block staking and Alchemy, actually, I'm not too sure about Alchemy, but for some of the other services, they're more focused on retail. In which case, if you're an individual staker, you'd want to take custody of your ETH because that's safer for you. I mean, you might not trust putting $11,000, $12,000 in the hands of a staking as a service platform you're not too sure about. So just that custodying part, I think.
Well, and I also thought it was interesting that when you were asking Diogo about, how much demand he's seen from clients for ETH staking, he was basically like, well, there really isn't any, right? Like people just like, it's kind of like off people's radars completely. And I think it goes to the earlier point that there's just been so much other stuff going on that people kind of forgot this is even a thing. And, but they've been, I mean, honestly, when I first asked Anchorage, they wanted to come on, like their PR person didn't even know if they were like building a staking as a service solution or not. It was just, she got back to me like a day later. She's like, oh yeah, actually we are doing this. So it's like totally like under the kind of like this, under the radar thing, I guess, that they're, and I give credit, like, you have to kind of skate where the puck is going, right? So credit to these guys. They're not having like, customers just banging down the door saying we want to stake ETH, but they're making a bet on this, that like, hey, this is going to be something that institutional investors are going to want, and we need to be ready to give it to them.
And so also for the institutional clients that they do have, I mean, even if just one or two says, hey, can you help me with ETH2 staking? I think it's not too much of a lift for Anchorage developers as well as, financial experts to kind of create the package of custodying ETH, of being able to stake on the platform, because they've already provided staking for like other proof of stake blockchains like Cosmos. And Diogo had explained, it's not too different. So I don't think it was a major lift, even if just one of their institutional investors were like, hey, this is something I want to do. Could you help me? And I think Anchorage would have been more than happy to be like, yeah, of course.
Cool. So turning over to our markets reporter, Dan Kari. So DC, what was like the big kind of takeaways on your end from the event?
Yeah, I mostly focused on paying attention to the markets track, the trading track with Brad and Liao, who hosted that. One thing that I noticed in the markets, and obviously I look at things from almost always from just like a trading and investor perspective. Usually these events cause some degree of price increase. And for whatever reason, over the past 24 hours, that didn't really happen with Ether, which kind of surprised me. But it also just kind of proves that Ether still kind of moves in tandem with Bitcoin. And that's sort of like what we've seen over the past 24 hours. Bitcoin's kind of been sideways. Ether's been sideways. There's a couple of reasons why that might be. It's possible that a lot of the folks that tuned in to the event are already investors in Ethereum. Like they're already very knowledgeable about Ethereum. They already hold it. So there wasn't really a whole lot of market movement in the conference. One of the things I think is really interesting for traders is this idea of the bull case, the positive sentiment, versus the bear case for Ethereum. The bull case really has been, okay, Ethereum is like this future of finance. There's a lot of cool things to play with. There's even like this ability for programmers to use smart contracts, do all kinds of cool DeFi trading applications. The bear case has been, and it always has been, is that there's this sense that there's a limit to what Ethereum can do. And the fact that there's even former Ethereum co-founders working on alternate solutions, including Polkadot and Cardano, it just tells you that there is some technical limit to what Ethereum is going to be able to do. Now, ETH 2.0 may change that game. We just don't know. I mean, another thing that we saw was that, you know, there's some people that are building on Solana. There's an example of that, like FTX and those folks. But we do know what a good ecosystem does look like. So I've watched Ethereum since it launched. It launched about 6.5 years ago, and the progress that it's made and the ecosystem that it has built and the community is just larger than anything else that's out there for smart contract technology and DeFi. Can Ether killers do that? I think that's like a fundamental thing that we can look at, is we can see what has happened and how the Ethereum economy has developed. And can Polkadot, can Cardano, can Avalanche, and I'm leaving out some other ones, but can some of these other projects mimic the success that Ethereum has had so far?
So DC, what did you think about, we had two really compelling presentations on the trade secrets panel. I thought one laying out the bull and the bear case. We had David Hoffman from Bankless giving his triple point asset thesis for the bull case for ETH. And I've heard him, I've heard of that. I mean, I think I've read some things from him on that before. I'd never really seen like a really like concise, layout of like what his thesis is. And it was pretty convincing. And then I heard, we had Vishal on to give the bear case, and he's basically saying, look, like this stuff, ETH2 is going to take so long that by the time it's finally up and running, everyone else is going to be gone. And I was like, all right, well, that's pretty convincing too. So, so I'm kind of, I guess my mind hasn't really been, I haven't really been persuaded one way or the other, but like, I mean, what's kind of your takeaways from, I guess, those two presentations in particular?
Yeah, I think there's compelling reasons for both sides. And this is what makes this market so fascinating. I'm looking at the Ethereum market every day. There's always all these interesting fundamentals that you can look at that's really different from Bitcoin. Okay, you got total value lock, you've got this active derivatives market. So traders are really paying attention to where all of this is going. I sometimes wonder about the bull case in that a lot of it is an extrapolation into the future. And we've seen that Ethereum has some challenges in terms of scaling. We had the fees get out of control. There was a limit to the amount of activity that could occur. And that's going to make it hard for new entrants to come in. Now, I know there's a lot of scaling solutions out there, and I know Vitalik is talking about getting developers to use those, and that's fine, that's great. But again, there's just, the bear case just feels like there's a limit to what the network can do. We saw this many years ago with Bitcoin, and to some degree, it's sort of happening again, is that when there's some traction in these networks, they just can't moon. They can't moon because there's just a limit on these blockchain networks right now. The true winner is going to be whoever has a platform that can scale to millions, tens of millions, hundreds of millions of users eventually. And we're just not there yet.
And then, Will, what was some other of the highlights? What were some of your favorite panels that you watched or moderated? You did one with Alex Gedavani of Delphi Digital on the ETH monetary policy, which was, frankly, like I'm gonna have to rewatch that one a couple of times, I think.
Yeah,
it was a little over my head, but it's super interesting. But I mean, what was kind of your big takeaway out of that one?
For sure, that one was interesting, and I think it's something that everyone in Ethereum or anyone with some sort of exposure to Ethereum should be paying attention to. There's essentially like two visions going forward for how Ethereum's monetary policy is going to work. One is kind of, the status quo, things stay the same, and they just kind of have a general emittance of Ether every year, a set schedule. It's very easy to find right now. But there's another kind of growing thought of this new EIP called 1559. We've written on it at least twice, and basically that will flip the fee market on its head. So you'll have like a set base fee that you pay to miners and then an optional tip. And the whole point of that base fee is to encourage more users being able to use Ethereum and kind of allow the system to have a little bit more throughput. It won't necessarily decrease the average transaction fee. That could be a positive outcome. But the whole point is like, hey, Ethereum keeps getting these huge backlogs during certain moments. Like in March, when we saw the price of Ether drop like 30%, 24 hours, all these applications, specifically DeFi applications, were trying to settle transactions and like execute transactions, but they couldn't because there was like backlog on the Ethereum blockchain. So this fee model should hopefully kind of change things up a little bit. And we'll see if that happens. At the same time, it's just going to kind of change how people interact with Ethereum, specifically miners. I think I wrote a piece a week or two ago about how Ethereum miners are not super happy with this fee model because the tip is so small and the base fee is burnt to the network, which makes Ethereum's monetary policy deflationary as opposed to radically inflationary right now. And of course, miners don't like that because then they get less money. But Ethereum miners and even cryptocurrency miners in general don't wield a ton of power. So we'll see what happens with that. I would say go read about it if you're interested in Ethereum monetary policy. It's definitely something to pay attention to.
Nick, you also did we had sort of a workshop session on taxes, and since today is tax day, we can get your thoughts really quick on just like what the highlights of that session were from your point.
Yeah, so one topic we discussed were DeFi taxes. Stepping back a bit, crypto taxes are, in the US at least, are kind of what's the term? Confusing.
Pain in the ass.
Yeah, so basically, like now, like I had not honestly thought about this before I spoke to my panelists yesterday, but DeFi taxes are probably going to be insane because right now the way you have to handle taxes, like you track all your transactions, you figure out how much you made, how much you lost. You got to figure out what standard you want to use, so you got to be consistent about how you're evaluating their value, right? Because cryptos had occasions where it's been pretty volatile, so price of your asset might go up or down through a day depending on what happens. So you got to be careful about how you value your crypto assets when you try to file your taxes. So DeFi just kind of makes it all more confusing as far as taxes go. If you're inserting one asset so that you can stake a separate asset that you've wrapped around whatever in a smart contract, things get weird. Is I think that's my takeaway from yesterday's panel. And then the other question is like, we've had a couple major losses. We've had smart contracts go down due to bugs or whatever. So I'm genuinely curious. Like, I imagine the IRS is aware to some degree of all this. I'm genuinely curious to see how they approach DeFi and what they're going to say, because the big problem about crypto taxes is that you've run the risk in the past of being heavily overtaxed based on if you buy Bitcoin and sell it at one value, or if you buy Bitcoin and hold it and it's got a certain value and then the price tanks because of crypto winter or whatever, and suddenly you're on the hook for taxes well in excess of what you actually the value of what you actually hold. So that's definitely a risk that will continue.
Yeah, well, a lot of people got wrecked on that back in 2018, right? After
Yeah.
they bought at the peak, and then tax year's over, but you have to pay taxes, and that Bitcoin you bought at 20,000 is now worth 7.
Exactly. And you also don't find out about it immediately because the IRS works on a little bit of a lag. So, if you suddenly lost 13,000 and you filed whatever, and the IRS got a statement from the exchange that holds your assets saying like you actually hold X amount at the end of 2018, suddenly in 2019 you're getting a letter from the IRS saying like, hey, you misfiled your taxes last year.
So if like, I mean, this question is not designed to like promote tax evasion in any way, but like, given the fact that so much of the current, it seems like the current IRS kind of crypto tax apparatus revolves around, exchanges reporting to them and or use of, blockchain forensics and other things like this to try to find who's acquiring and moving funds around. But if I'm operating in the DeFi world on Uniswap, and this is all like, since I'm just some anonymous MetaMask wallet trading funds around, like, can they find? I mean, am I like, what degree of confidence should I have that they will find me and hunt me down if I'm a whale trying to not pay?
That's a very good question. We do know that the IRS has made an effort to try and find contractors who can help it with this, forensics question. So I wouldn't feel like supremely confident saying like, oh, I'm anonymous, but they can't find me. The U.S. government will find you. I strongly suspect that if you try to hide your holdings because you're using whatever, the IRS will find a forensics firm that can say like, oh yeah, this guy did this transaction for this value. Probably like the best advice, I'm not a tax professional, but my best advice is like track all your transactions, make sure you know like what you're actually doing. If you want to buy $10 in Bitcoin, then convert that to Ether, then convert that to some decentralized finance project token to stake. Track the values that you're spending and how much you're holding, and what their US dollar equivalents are, because that's the kind of information that will help you if you do get a letter from the IRS. That'll help you later on say like, okay, well, I can prove that I didn't actually have like $1,000 in Bitcoin. I only had 100, and here's how I can prove it. Just
document, keep a paper trail essentially of everything you're doing.
Exactly. Keep your receipts, keep all your numbers somewhere where you're not going to lose them.
And then Christine, you had a couple of interesting sessions on the Unlock track on aggregation tools and also on ETH2 custody. Did you have any like kind of light bulb moments in those sessions or things that you found interesting?
Yeah, let me think. For the custody one, immediately one of the things that comes to mind is when one of the presenters likened the Beacon chain, which is the proof of stake blockchain that's going to be launching at phase 0 with Ethereum 2.0, the Beacon chain to a hairbrush, and then the core of the hairbrush as the Beacon chain and its bristles, the shards that will come later in later phases of development, which I thought was hilarious, but also a good analogy. I'm sure there was some other things about the DEX aggregators. I liked hearing just how fierce the competition is starting to get with DEX aggregators. In my mind, DeFi trading, and for traders who are trying to get the best prices for their tokens, I can understand why they would go to a DEX aggregator that kind of just looks at all the prices across all decentralized exchanges and finds you the best one. I thought there was only a handful out there, but it turns out that the competition between those handful and other new companies that are coming in, new entrepreneurs that want to kind of capitalize on the wave of popularity DeFi has been getting, that's caused DEX aggregation competition to become quite fierce. And I had expected a little bit more kind of debate on the front of Ethereum killers, but as we had discussed kind of earlier in this live, there wasn't that much like tooth and nail fighting. But on DEX aggregators, I think there were. I think there was quite a lot of debate and explanation of why this particular service is better than another DEX aggregator service. So it seems like the competition front is fiercely happening in the DeFi space right now. So if we want to go where the drama is, let's go.
Yeah, like the aggregation tools, like the aggregation tools, I think is a really interesting. I did the last panel today on the main stage was I led a panel called "Future of the Front End: The Race for the DeFi User," and it's this question of like where will people just ultimately go to access these services and to make these trades. And like just the sheer volume of products, and these are good products too. These are actually easy to use. These are amazing products that are out there, and it's really like, I guess the analogy that I've kind of been using, which is probably not like an original analogy, but it's like, an aggregator to DeFi is like, a Kayak or Expedia to travel booking, right? Where it's just like, I don't go to just delta.com to go look at flights. Like I go to Kayak, right? Or I go to Expedia, or I go to hotels.com to find like I'm agnostic as to like where the actual, what hotel I'm staying at. I just want the best deal and best location. And I feel like, that's kind of the business model that these aggregators will. So I'm curious to see like what the actual, how these guys actually make money, and like where the kind of the value accrual is in these products, because it's definitely something that people want to use. But going back to the tax question really quick, DC, did you have any thoughts on the DeFi taxes from the trader perspective?
Yeah, I was listening to Nick and I didn't want to interrupt him while he was discussing this. So one of the trends that I think we're going to see is that governments around the world at all levels are very interested in crypto as a revenue generator. In the United States, we're seeing the legalization of certain things like sports betting and marijuana, and it's being taxed. And crypto is going to be no different from that. And traders are very aware of the taxes that they need to pay on their basis, on their capital gains. It is a lot more complicated from a DeFi perspective, and people are going to have to explain to their accountants what all this means. But it doesn't mean that any government is going to just forget about crypto as like a taxation method. Like, it's going to be a huge revenue generator for governments over the next, just basically forever. So the idea that you can't track this stuff or that it's too difficult, like it's never going to be an excuse. DeFi does make it a little bit more complicated, but I mean, traders are gaining alpha from this stuff. They'll figure it out.
Will, going back to Will quick here. So you also had another session on the Unlock stage with Sergey of Chainlink and then Stani from Aave talking about composability. And this is one that I'm really excited to go back and watch, actually, because I didn't get a chance to see it. But composability is one of these terms that's like it's just thrown around just all the time now. But like it's one of these things, like I don't fully understand it, and I don't think other people fully understand it either, including some of the people that are like throwing it around. But the concept in itself is super empowering and amazing. And I feel like, once you kind of wrap your head around like, okay, this is what this actually is, it's like kind of a light bulb moment where it's like, okay, this is all the stuff that's actually possible. And so maybe talk through some of the highlights from that session where, it was Stani and Sergey kind of giving just like an educational overview of like what composability is and how, Chainlink and Aave are. It's really kind of a nuts and bolts kind of question that I think
for sure,
noobs really need. It's really important for like noobs to this space to like really understand how this stuff works.
Yeah, not even for noobs. I think it matters for everyone to kind of understand this, because what we're seeing is financial applications, and we can argue if they're valuable or not, but at the same, they're new and they're novel. So basically, composability, it really is that money Lego term where you can like take one product and then smush it together with another product. So you're looking at like one person's GitHub repo, like Compounds, their governance feature, for example, like how they decide what interest rate to put on a token. They'll have like a voting feature, and all that information is like coded on GitHub, and it's been audited, it's been checked by a bunch of different people, and it's good to go. And then Aave will come along and take that feature from Compound and plug it into their money lending market. And then you have the best of Compound, you have the best of Aave together and make a whole new Lego. So it is really just like stacking these things together was the whole point. And so when we went through it with Stani and Sergey, Sergey kind of talked about the Oracle networks, which is a key component of this because you need price feeds, and that's what Oracle does. It gives you price feeds for financial applications. It may seem a little boring, but that's how all this works. Bloomberg Terminal was one of the key products for revolutionizing finance in the late 20th century because they had like live information for traders to use and people could input price feeds really easily. In the same sense, we see that with DeFi, with Chainlink and a few other Oracle networks, like Maker has one. I think Uniswap is kind of building one out slowly as it grows, and then Band Protocol as well. For Stani, we kind of talked a little bit about composability in the sense of adding novel features. For example, they have a credit delegation line that they created with Compound. I think they pulled from them a little bit. Basically, this gives you the ability to delegate the credit that you get to another person. And credit, of course, is just kind of, it's a weird concept. If you kind of like step back, you're getting money out from somebody else. You're putting something up for collateral, and hopefully you're going to do something positive with it and give a return. But in crypto, since everyone is so big on like holding your asset, having your own keys, and over collateralizing, credit's kind of tough to do. So they kind of created a protocol that has some cryptographic guarantees to making credit work. So we kind of went through that with Stani. That was some bigger news, I guess, in August and September, but just kind of went over it. And I think for noobs, it's good to know how these work before you invest and which ones are good to use if you choose to invest your money in these markets. For people who are kind of forward looking, it's good to know where the next money Lego is going to click together.
And Will, did you guys talk about composability in the context of Ethereum 2.0? Like in a sharded environment, how does that impact DeFi's money Lego system?
So I think we got to it a little bit at the end. Just a plug, Brady Dale did a nice piece on this the other day. You can go read it on CoinDesk. But essentially what Christine's talking about is ETH 2.0 is going to have a lot of different shards, which a shard is like its own blockchain, and there's going to be multiple blockchains just all together. And some dApps are going to live on one blockchain, other dApps are going to live on another blockchain. And so them talking to each other is going to be difficult. And we kind of got into it. For right now, it just looks like that's too far in the future. Shards come online in phase 1 and phase 1.5 of Ethereum. And I think for the most part, they're just going to kind of figure it out when it gets there. And they have some plans for it, but it should be a little odd for sure.
I guess we'll see.
Yeah, that was a topic that came up on my panel as well, on the future of the front end. And I mean, I was asking the question to the panelists in the context of, you know, with all these kind of aggregation tools and services that users are using, these beautiful services that users have to be able to interact with all these platforms, how will the sharding essentially, you know, will break the composability of some of these applications? And I mean, I really like how Haseeb Qureshi frames it. He kind of uses this like cities analogy where there's going to be, you know, one shard will be like the Manhattan, like the DeFi shard will be like Manhattan, another shard will be like Wyoming. And, you know, depending on what you want to do, like you'll go to that shard and like pay the fees. Like if you want to live in Manhattan, you'll go pay the absurd rent and deal with the traffic to be in Manhattan. You know, and for the people that aren't interested in that, they'll go to a different shard where there's kind of less, you know, there's more land available, it's cheaper, and et cetera. So I kind of like that way of thinking about it. I mean, it seems to make sense intuitively. So I guess we'll see how it all plays out. I guess just wrapping up here, 2 questions for everybody as we'll go around the horn here. So 2 questions are, what is your favorite Lego set? Since we're talking about money Legos, we'll talk about what's your favorite Lego set of all time. Mine is the Black Seas Barracuda pirate ship from like 1990. Ooh. I've dated myself here, I guess, but
you did.
It's selling for, I just looked it up. It's selling for $465 on eBay right now. So if anybody's wondering what's getting for my birthday, which is this Saturday.
Can I just say,
Yeah.
I wonder, does the company that creates Legos, are they aware that the Ethereum community is using that term?
It's got to be some kind of trademark violation. Some IP,
Right? That's what I was thinking. I feel like there's a lawsuit there.
Yeah, I'm actually kind of curious. I've been
wondering.
Look at
Nick's Lego train set behind. Oh man, that's impressive.
And I had to ask that question because if you were going to ask me that, Aaron, I would not have a good answer because I remember the complicated Lego sets back in the day, and I was like, not.
You never got past. You couldn't get past Duplos, huh?
Nope. I made like a house, and then I switched to Lincoln Logs.
Well, Lincoln Logs are good. Those are classic. So anyway, so 2 questions: favorite Lego set, and then when will the beacon chain launch? Predictions. Let's start with you, Will.
Anything Lego Star Wars is just incredible. So had all those. See what else we got there. Beacon chain, I think it's launching. So I think the deposit contract is going to go live like either tomorrow or early next week, and then the beacon chain goes live like a week after. That's my take.
Okay. Nick, what do you think? Legos and beacon chain.
Well, so the beacon chain, I don't know I can speak to with authority, but it seems like things are really accelerating. I was looking at articles from last year, and we are talking about like the impending launch of ETH 2.0, but it is 2020, and it sure seems like there's actually a lot more momentum. As far as the Legos go, I'm really into the perhaps obviously the Lego trains. I've got a Emerald, what's it called? Wow. I've got a couple custom, not custom, but like ones that I kind of just built from the ground up. That are really just like steam engines, which are a lot of fun.
Cool. Christine?
I don't like any Legos. I can't believe we're even discussing this. I hate Lego.
Wow.
I think they're very annoying.
Toy of the century.
Wow.
And they
Can you hate
hurt
Lego?
when you step on them accidentally, which has happened many times in my past. And there are just so many pieces, you lose them all. Anyways, I could go on about how much Lego sucks, but it's fine. I won't judge any of you guys.
What an odd
I'm going
vendetta.
to address the real question here, the real question we're talking about, which is the beacon chain and when it's going to launch. That's very exciting. I think that it will launch end of October or early November is my best guess.
Cool. And DC, I guess you already answered. You already demurred on the Lego question, but what about the beacon chain? DC, you there? What are you thinking?
Yeah, I'm here. I'm
doesn't want to answer the
thinking
question.
about how painful it can be to
Stumped.
No, I'm just thinking about how painful it can be to step on a Lego. I mean, I think the Star Wars sets are pretty cool. I'm not a real big fan. I mean, I don't really use Legos anymore. Like I said, the beacon chain, it's hard to. I really don't want to make a prediction. If they have announced something, they haven't announced something. I think one thing that's going to be really interesting, though, and that I am going to follow is what the market is going to, how the market is going to react to that event, because it's very much a fundamental event, kind of a once in a lifetime for Ethereum event, and so it'll be interesting.
I mean, what do you, as far as price predictions, what do you think will happen? I mean, there's a lot of speculation either way that this will be a positive or a negative thing for ETH price, at least in the short term. What do you expect to happen there?
Well, and it's even the terminology they use. They're calling it a beacon chain, right? It's a beacon. Like it very much sets up for the next evolution of Ethereum. And so if it goes well, I think it's a positive sign. I think we'll see positive or bullish market momentum for Ethereum. And it'll be interesting to see how Ethereum, or Ether at least, interacts with Bitcoin during that event. Will it cause Bitcoin to go up? Will it cause Bitcoin to go down? Again, these assets oftentimes they're in tandem, so much so. But all of this stuff that's being built on Ethereum is really differentiating the asset.
Cool. Well, I think we're going to wrap it up here, guys. Thanks for joining us this morning, and thanks everybody for watching, and hope you all enjoyed and learned something from, I guess, this broadcast here, and then also the event that we did yesterday. It was, I think we have some really exciting times coming up. So excited to see how all this pans out.
Thanks, Aaron.
Thanks, Aaron.
Thanks to all the guests. Will, Daniel,
Thank you.
Christine, Nick, thanks for joining. I'm Aaron Stanley, signing off.